So let's dive into this recent roundup of VC moves in crypto. It's interesting how Bitcoin's resurgence is shifting venture capital strategies with a strong focus on Bitcoin DeFi.
Yep, right. The article highlights that Bitcoin's maturity as an institutional asset has attracted huge investments, like that $175 million across multiple VC deals.
Exactly. And there's this whole idea that Bitcoin treasury companies are, well, injecting billions into the market, reinforcing Bitcoin's role as a kind of safe haven.
It's like, Bitcoin is not just a digital asset anymore, but a central pillar in the crypto venture landscape, huh?
Yeah. And what's cool is that besides Bitcoin, there's a broader theme emerging. Venture capital is also backing tokenization, stablecoin infrastructure,
Right.
and settlement technologies.
Speaking of tokenization, the piece mentioned Invenium partnering with Mantra. They're investing $20 million to bring real-world assets onto the blockchain. That integration of asset reporting and surveillance seems like a game changer.
It really does, and it's like opening the floodgates for institutional real-world asset adoption, especially in regions like the UAE and US.
Yep, but do you think this rapid push into tokenization might run into regulatory hurdles? I mean, it's ambitious but challenging, right?
Well, that's a good point. The partnership, in fact, seems to be designed to deal with that, integrating compliance measures directly on the chain. It's a smart move to align with regulatory needs, though it won't be entirely without teething issues.
Yeah, right, exactly. And then there's stablecoin infrastructure. For instance, the stable blockchain raising $28 million to bolster USDT adoption. This focus on stablecoins is clearly riding on regulatory clarity, especially with things like the Genius Act being passed.
Yes, it supports the idea that stability in the market could mature faster with such backing. And projects like Dakota, raising $12.5 million, further reinforce the move towards stablecoin-enabled banking services.
It's almost like they're building a bridge between traditional finance and crypto, don't you think?
Absolutely, with initiatives like Jarzi offering tokenized equity opportunities, even at a low minimum investment of $10. It's democratizing access to private equity, albeit in a digital tokenized form.
And then we have Bridgeport connecting crypto exchanges and trading firms, ensuring settlement is smoother. That's a vital layer, especially as the overall crypto ecosystem grows more complex.
Sure is. It's like these technology layers are interdependent. While Bitcoin's resurgence drives a lot of VC interest, the supporting infrastructure, tokenization, stablecoins, settlement networks ensures the ecosystem remains robust and scalable.
I do wonder though, sometimes isn't there a risk of over-reliance on one asset class, Bitcoin, while the infrastructure around it might be lagging behind?
That's a fair critique. I mean, Bitcoin's influence is huge, but if the underlying technologies and regulatory frameworks don't keep pace, it could lead to bottlenecks or even misallocations in capital.
Exactly. It's a balancing act. The consistent funding, whether it's $22 million for Spico or the smaller rounds for, say, Jarsi and Bridgeport, is trying to ensure the whole system stays integrated.
Yes, and it's compelling how each of these ventures, though different, ultimately contribute to creating a more interconnected crypto financial ecosystem.
Well, that wraps it up nicely. Bitcoin leads the charge, while tokenization and stablecoin projects add the necessary infrastructure. Quite a dynamic landscape, wouldn't you say?
Absolutely, it's exciting, and the pace of innovation here is really something to watch.
Yep.